Hi students, welcome back to my channel. First of all, a very good morning to all of you. In today's session, I'm going to discuss AS-16 borrowing cost. Okay, and in this standard, I'm going to discuss one thing, mainly what the standard says. For example, I took the loan or any borrowing for purchase of a asset, purchase of an asset. So then, whatever the interest I paid in respect of that loan, shall I include it in the cost of that asset or will transfer to the profit and loss account? And normally, any interest incurred will be transferred to profit and loss account. But if the borrowing is used for purchase of the fixed asset or purchase of some current assets like inventory, etc., if those are covered under the definition stated under the standard, then that interest part is also included in the cost of the asset. So that is the main objective. Means the borrowing cost is required to be capitalized or the borrowing cost is required to be expensed. Capitalized means will be added in the cost of the asset and expensed means we transfer to profit and loss account. Okay. And next, what is the borrowing cost first of all? Before going to that, what is the borrowing cost? Borrowing cost include five elements. It includes what five elements, and one is interest and other committed charges. And interest and other committed charges means and those charges you committed at the time of raising the borrowing, like any processing fees we have, or any borrowing, any brokerage fees we have, etc. And amortization of discount on issue of borrowing or premium or redemption of borrowing. Like for example, company raise the amount through the debentures, raise the amount through the debentures, and the debentures are issued at 90 rupee. Actual value of the debenture is 100 rupee per debenture, and is redeemed at 105 rupee. Redeemed at 105 rupee. And here the discount at the time of issue of debenture is 10 rupee. Nothing but 100 minus 90. And premium on redemption of debenture is nothing but what 105. We are paying excess. That is also a loss to us. So nothing but what 5 rupee. 105 minus 105 minus 100. 5 is 15 rupee. And this 15 rupee is generally treated as loss on issue of debenture. And this loss on issue of debenture will be amortized over the life of the debenture. Over the life of the debenture in the proportionate of the outstanding balances we have at the beginning of the year. So, say for example, 5 years we apportioned equally. Then 15 by 5 per year is how much? 3 rupee. This 3 rupee is called as amortized part of discount on issue of borrowing or premium on redemption of borrowing. This is also treated as a part of the borrowing cost. Okay. And another one is amortization of the ancillary cost relating to the borrowing. Means at the time of raising the borrowing, whatever the cost you incurred and finance charges included in the finance lease obligations. So we'll discuss it in AS-19 finance in case of leases. And another one is exchange difference. We have separate discussion about the exchange difference. There I will explain it. Okay. And these 5 points are covered under borrowing cost. One is interest and other committed charges incurred. And another one is amortization of discount on issue of borrowing and premium or redemption of borrowing and amortization of ancillary costs relating to the borrowing and finance charges included under the finance lease obligation exchange differences. Okay. And one more coming to the here, I'm discussing one thing. Any interest or other committed cost incurred in relation to the borrowing. What is meant by borrowing here? Borrowing. So borrowing stands for what? Any loans taken from bank or from the outsider, any amount raised through the debentures or bonds, etc., and any amounts raised through the shares. But coming to the shares, generally two shares are there: equity and a preference share. Equity shares is not a borrowing. Equity share is not a borrowing. But coming to the preference shares, which are in the form of the liability, is only treated as a borrowing. which is in the form of the liability, like redeemable preferences. Redeemable preferences are covered. But in the form of, not in the form of liability, not in the form of a liability, like what? Irredeemable preferences or convertible preferences, etc. And those are not treated as a borrowing. Those are not treated as a borrowing. If the amount raised through the loan from the bank or from the outsider, or through the by issue of debentures or bonds, or by issue of shares also. But in case of shares, only preferences which are in the form of liability is considered. These are all treated as what? Borrowing. In relation to these borrowing, whatever the cost we incur, and in case of loans, so we are paying what? Interest. In case of debentures also we are paying what? Interest. And in case of redeemable preferences, we are paying what? Preference dividend. And these are all treated as what? Borrowing cost. These are all treated as what? Borrowing cost. Interest and other committed cost incurred at the time of raising the borrowing. Okay. And next one. Next important definition under borrowing cost is nothing but qualifying asset. What is meant by qualifying asset? So, qualifying asset is nothing but it is a tangible or intangible asset which requires some substantial period of getting the available for utilization is said to be a qualifying asset. So, but substantial period is not defined here under AS-16. What is meant by substantial period? That is not defined here. And generally, if any asset took some period for getting ready for its usage, that is called as what? Qualifying asset. What is meant by that period or substantial period? Say, I am going to complete the respected building in 3 months or 4 months. That is not treated as a substantial period. So generally, if nothing was stated, we consider 12 months as a substantial period. 12 months as a substantial period. And sometimes, but exactly 12 months, even more than 12 months or even less than 12 months is also treated as a substantial period, because substantial period is always depends upon facts and circumstances. Facts and circumstances. For example, I enter into the contract with a party, and that party promised me to construct the complete building in 15 months. 15 months, and he started after completion of the 2 months, and he got a new technology. Due to the new technology, implementation of the new technology in the construction will be over within 8 months or 9 months. Say here the total construction was completed in 9 months, which is less than 12 months, but there is a evidence regarding within the shorter period we are able to completing the respected product. Even that shorter period is also treated as a substantial period. It always depends upon the facts and circumstances. Facts and circumstances or situation. Even a shorter period is treated as substantial period if substantial evidence is available to state the shorter period as a substantial period. Okay. So qualifying asset is nothing but it may be a tangible or intangible asset which requires some substantial period of getting the ready for its usage of the asset. Is treated as what? Qualifying asset. And substantial period is not defined anywhere in AS-16. Generally, we consider 12 months. Even the shorter period is treated as a substantial period when we have substantial evidence in supporting to that shorter period as a substantial period. And here, some examples I provided. Coming to PPE. PPE is treated as a qualifying asset or not? As intangible assets under development, investment property. Like investment property is nothing but what? Building and land. And inventory purchased is not a qualifying asset, but inventory manufactured here. And investment in financial asset never be a qualifying asset. But remaining, even PPE, intangible asset, investment property, inventory manufactured, in these cases also, you need to verify for getting the ready for usage or sale of these all assets. So shall we require a substantial period on? If yes, then those are treated as qualifying asset. Otherwise, don't treat them as a qualifying asset. Okay. And next one, how to recognize. So before going to the recognition, and here one point we have nothing but what? Exchange differences. And first we completed exchange differences. Exchange differences are nothing but what? For example, you take a loan from the bank. So Mr. A took the loan from the bank located in USA of $1 lakh of $1 lakh. On the date on 1/4/2025, on that day, $1 is equal to say 75 rupee. On that day, $1 is equal to 75 rupee. So total borrowing is nothing but so 75 lakhs, correct? So $1 lakh into 75 rupee. Total borrowing is 75 lakh, and the rate of interest is say 4%. Rate of interest is say 4% per annum. So on 31st March 2026, and that borrowing is not clear. Borrowing is not clear. But on 31st March 2026, $1 is equal to say 80 rupee we have. Say 80 rupee we have. And it means what? As per AS11, as per AS11. So borrowing is a monetary item. It is required to be restated at the closing rate on the date of balance sheet. So the borrowing will be what? 80 lakhs. Borrowing will be what? 80 lakhs. And the total difference. How much amount of borrowing increases? 5 lakhs. And this 5 lakh increases due to change in exchange rate. Shall we consider this 5 lakh? The exchange difference on principal part of foreign currency borrowing. Exchange difference on principal part of foreign currency borrowing. Shall we treat it as a borrowing cost as per AS-16 or not? And remember, if it is covered under AS-16, if it is covered under AS-16, that part is not covered under AS-11. AS-11. So out of the 5 lakh, either full amount may be covered under AS-16 or part of the amount covered under AS-16 or remaining part will cover it under AS-11. AS-11. And how to consider it? How to consider it? And here, in case of exchange differences, in case of exchange differences, that too relating to the principal part of foreign currency borrowing. If it results in exchange profit, exchange gain, or if it is results in exchange loss. And remember, if it is an exchange gain, it covered under AS11 only. It covered under AS11. As per AS11, exchange gain is credited to profit and loss account. In case of exchange loss, and only some part is covered under AS16. Which part? To the extent of to the extent of difference between interest on local currency borrowing and interest on foreign currency borrowing. Foreign currency borrowing. So to the extent of difference between interest on local currency borrowing and interest on foreign currency borrowing. So this amount is covered under AS16 and the remaining part is covered under AS11. And remaining part is covered under AS. As per AS11, exchange loss is debited to profit and loss account. Exchange loss is debited to profit and loss account. So exchange differences on foreign currency, exchange differences on principal part of the foreign currency borrow, only principal part. If it is an exchange gain, credited to P&L. If it is an exchange loss, only to the extent of what difference between interest on local currency borrowing and interest on foreign currency borrowing is treated as borrowing cost as per AS16 and the remaining exchange loss is we transferred to profit and loss account as per AS11. Profit and loss account as per AS11. Okay, I hope you understood. We'll do some problems relating to this one. And here, so Rutu Builders Limited has borrowed a sum of $2 lakh at beginning of the financial year 17-18 for its residential project at Libur plus 13%. What is meant by Libur was given here 1%. Means 1 plus 3, 4% rate is there. The interest is payable at the end of each year. At the time of availment, exchange rate was 61 rupee per dollar and the rate as on 31st March was 65 rupee. If Ritu Builder Limited had borrowed the loan in India in Indian rupee equivalent, the pricing of the loan would be having 10.50. The same loan we took in the India, what is the rate of interest? 10.50. compute the borrowing cost and exchange difference. Okay. So what I said, first of all, so how much, what is the loan we taken? So 20 lakh dollar total borrowing on what date we take? At the beginning of the year, say 1/4/2017. So 20 lakh dollar into 20 lakh dollar into what is the rate? 61 rupee. So 20 lakhs. And on 31st March 2018, 20 lakh into what is the rate? 65 rupee. So 20 lakh into 65, 1300. So 1300 lakh. There is an increase in borrowing. So this is a exchange loss. So how much amount is there? 80 lakhs. Exchange loss, 80 lakhs. Then in case of exchange loss, what I said. So to the extent of difference between interest on local currency borrowing and interest on foreign currency borrowing. And what is the interest on local currency borrowing? So local currency borrowing is nothing but the currency in Indian rupee equivalent to that borrowing on the date of taking the loan. Nothing but what? 20 lakhs, 20 lakhs into 61 rupee on the date of taking the loan into what is the rate of interest in India? 10.5%. So 20 lakhs into 61 rupee into 10.5%. Nothing but so 12 lakh 81,000. 12 lakh 81,000. And what is the interest on foreign currency borrowing? So foreign currency borrowing. So 20 lakh dollar into what is the rate? We have 4%, and the interest is payable at the end of the year. So we have to apply closing rate. Nothing but what? 65 rupee. So 20 lakh into 4 by 100 into 65. Nothing but what? So 20 lakhs into 4% into 65 rupee. How much amount? 52 lakhs. What is the part? 20 into first one, 61 into 10.5 by 100. Sorry, 1 crore 28 lakh. This is the one. 1 crore 28 lakh 10,000. And the difference amount minus 52. Nothing but 76 lakh 10,000. 76 lakh 10,000. And here, out of the total 80 lakhs, 76 lakh 10,000 is covered under AS-16 borrowing cost. And the difference amount is nothing but 3 lakh 90,000 is covered under AS-11 and is debited to profit and loss account. Okay. And one more point is, what is the borrowing cost here? Total borrowing cost. Borrowing cost generally covers what? Interest on that foreign currency borrowing plus exchange difference covered under AS-16. What is the interest on foreign currency borrowing? 52 lakhs plus what is the exchange difference covered under AS-16? 76 lakh 10,000. 76 lakh 10,000. So 76 lakh 10,000 plus 52 lakhs. Nothing but 1 crore 28 lakh 10,000. This is the amount considered as per AS-16. Okay. So here, and the total interest for the period 52. And exchange loss we have 80 lakhs on principal part. And interest on local currency borrowing 128. Total amount of interest covered under AS-16 76.1 lakh. Okay, and the 3.9 lakh covered under AS-11 and is transferred to what? Profit and loss account. Profit and loss account. Okay, and coming to the second one, so 22. Raz and Co has taken a loan of US dollar 20,000 at the beginning of the financial year for a specific project at an interest rate of 6% per annum, payable annually. On the day of taking the loan, exchange rate between the currencies was 48 rupee per dollar. So, and exchange rate at the end of the year is 50. And what is the exchange difference we have? Total $20,000 into 50 minus 48, 2 rupee. Nothing but 40,000. What is the difference? 40,000. So 40,000 is the total exchange difference we have. And corresponding amount, if you buy out of the 40,000, how much amount covered under AS-16, how much amount covered under AS-11? To the extent of exchange difference in interest on local currency borrowing and interest on foreign currency borrowing. Interest on local currency borrowing, if the same borrowing we have taken in India, 11%. That means what? $20,000 into 48 into 11%. Okay. So 20,000 into 48 into 11%. Nothing but 1,05,600. This is the local currency borrowing and the foreign currency borrowing. So 6% per annum is that. So $20,000 into 6 by 100 into 50. Nothing but 60,000. 60. What is the difference? 45,600. And this is the amount covered under AS-16. 45,600 covered under AS-16. And out of the total 40,000, total amount of exchange difference is how much? 40,000. But remember, the maximum amount of exchange difference covered under borrowing cost cannot be more than the actual exchange difference. Here, the difference between local currency borrowing and foreign currency borrowing interest is 45,600. But actual exchange difference is how much? 40,000. So total 40,000 is required to be covered under AS-16. AS-16. What is the total borrowing cost? Exchange difference 40,000 plus interest on foreign currency borrowing. Foreign currency borrowing how much? 60,000. This is nothing but what? 1 lakh. Okay. Total borrowing cost is equal to what? 1 lakh. Okay. So this is what exchange differences related. Okay. And next, coming to the recognition of the borrowing cost. And borrowing cost, when we recognize the borrowing costs are directly attributable to, if the borrowing cost is directly attributable to acquisition or construction or production of a qualifying asset, and that asset will able to provide some economic benefits to the entity in future, and cost is measured reliable. These three parts. One is the borrowing cost. Borrowing is directly attributable to acquisition, construction, or production of a qualifying asset. If it is relating to a non-qualifying asset, not covered. And that qualifying asset will able to provide some economic benefits to the entity in future, and cost can be measured reliably. Okay, the borrowing cost directly attributable to qualifying asset only capitalized, not qualifying asset. Expense to transfer to profit and loss account. Okay, and next one, types of the borrowing. Types of the, before that we see some problems, and here first one, PRM Limited obtained a loan from bank for 120 lakhs on 30th April. It was utilized as follows: construction of the shed, construction of the shed sorry construction of the shed 50 lakhs, and purchase of machinery, working capital, advance for purchase of the truck. Construction of the shed is completed in 31st in March 2002, and it took more than around 1 year, approximately 1 year. The machine was installed on the date of acquisition, and it means on the date of acquisition itself installed. No substantial period is required, so it is not a qualifying asset. And working capital is always not a qualifying asset. And purchase of the truck and the delivery of the truck was not received. Delivery of the truck was not received, but that once the truck you received, that is available for utilization immediately, so that any advance you provided, it is not treated as a qualifying asset. So, and it took some period, approximately equal to 12 months, so this is treated as a qualifying asset. Okay. Out of the total interest you paid 18 lakhs. And what is the total borrowing? 200, 120 lakh. Out of the 120 lakh, 70 lakh is not a qualifying asset. 50 lakh is only covered under qualifying asset. This part related interest is only transferred to accounted as per AS-16 by added to cost of the asset. So 50 lakhs into, sorry, what is the total interest? 18 lakhs. 18 lakhs into 50 by 200. And the remaining 80 lakhs into, so 70 by 120. Sorry, 120. 70 by 120. This part is capitalized. This part is expense. Okay. Hmm. And second one, a company incorporated June 2017 has set up a factory within a period of 8 months with borrowed funds. Construction period of had reduced drastically due to the usage of technical innovation by the company. Whether interest on borrowing for the period prior to the date of setting up of the factory should be capitalized, although it has taken less than 12 months for the asset to get ready for use. You are required to comment on the necessary treatment. And remember, substantial qualifying asset is nothing but asset which requires some substantial period for getting ready for its usage. What is meant by substantial period? Not provided in AS-16. Generally, we consider 12 months. And already I told you, even shorter period is also treated as a substantial period. So, but provided substantial evidence is available in supporting to that lesser period. He clearly stated technical innovation. So, new technology was introduced or used by the party. Due to that, construction period has been decreased to 8 months. So, there is a supporting evidence. So, that's why even it is a less than 12 months, it is a treated as a substantial period. And during that month and during that period, any borrowing cost incurred, it will be added to the cost of the asset. Okay. Yeah, next. And fourth one, Rohini Limited has obtained a loan from the institution for 500 lakh for modernization and renovation of its plant and machinery. Installation of the plant and machinery was completed on 31st March, amounting to 320 lakhs. So, and 50 lakh advance to the supplier for additional assets and balance 130 lakh are utilized for working capital. Three assets are there. One is the boiler plant, one is the modernization of plant and machinery, and second one is what advance to the supplier of for additional assets, and third one is working capital. And total interest is 65. And so here, the modernization of the respected plant and machinery, you may consider it as it may take a substantial period or not, because that point was not given in the problem. And based on your assumption, you may consider. So if you assume that the plant and machinery took some substantial period for getting ready for usage, then consider it as a qualifying asset. Otherwise, don't consider it as a qualifying asset. And I assume that it took some substantial period. Then plant and machinery is treated as a qualifying asset. And advance given to the supplier of additional assets which will be used in the respected plant and machinery, then only it is a qualifying asset. And working capital never be a qualifying asset. The total 500 lakh, for that you are incurring 65 lakh. Out of that, first 320 and 50 lakh related interest part is capitalized, and 130 lakh working capital related interest is expense and transfer to profit and loss account. Okay. And and here it is also the same problem but with different number, but here you have an assumption. So alternatively, the plant and machinery additional asset may be assumed to be a non-qualifying asset on the basis that renovation and installation of additional assets will not take substantial period of time. In that case, entire amount is treated as a expense and transfer to profit and loss account. Okay. And sixth one, Take Limited has borrowed 30 lakhs from the SBI during the financial year X1 to X2. The borrowings are used to invest in shares of Give Limited, a subsidiary company of Take Limited, which is implementing a new project. Estimated cost of 50 lakh. As on 31st March, since the said project was not completed, directed Take Limited resolved to capitalize the interest on borrowing. But actually, any amount invested in these shares, investment in financial assets is not a qualifying asset, and it is not covered under AS-16, not required to be capitalized, and simply it is transferred to profit and loss account only, because those are not requiring a substantial period of getting ready for its uses. Okay, that is our qualifying asset related part. And next, types of the borrowing. Okay, and I will upload this material in my Telegram channel, and I will provide the link below the in the description box, and please join. And I will upload there only important only important for the purpose of the students, and the remaining I didn't post there. And just to follow the Telegram channel, you will get the updates relating to my classes or these notes, etc. Okay. And coming to the types of the borrowing, specific, there are two types of the borrowings out there. One is the specific and another one is the general. Specific borrowings are nothing but the borrowings which are taken specifically for the purpose of construction or acquisition of a particular asset. Other than that, non-specific borrowing or general borrowings are there. And in case of specific borrowing, while taking the loan, for example, I took the loan from SBI for the purpose of construction of a plant and machinery, or purchase of the plant and machinery, which requires some substantial period. In that case, and that is treated as what specific borrowing. And there, the rate specified at the time of obtaining the loan itself is treated as effective rate of interest in case of specific borrowing. But in case of general borrowing, I took the loan from the different banks, either for working capital purpose, or for the or for running the business, or for purchase of the another asset, or for purchase of the another asset, and even for the purpose of construction of a qualifying assets, etc. Whatever may be. I may use that amount for any purpose relating to the business. That type of loans are covered under non-specific. In case of non-specific borrowing, effective rate of interest is calculated as weighted average rate of interest, and is also called as capitalization rate. How to compute it? Weighted average rate of interest, total interest by total general borrowings into 100 into 100. And for example, I took the specific borrowing around 100 lakhs. And during that period, actually, I am not using that amount immediately, and the entire amount I will not spend. Out of that, some amount I invested somewhere in the temporary investment. And on the temporary investment, during the temporary period, I am getting some income, interest. Shall I consider that interest and how to account it? Generally, any interest received on the investment we transfer to P&L. But if the amount of investment is made out of the specific borrowing for temporary purpose, and during that period, any interest you are getting will be adjusted to actual amount of the borrowing cost over the specific borrowing. But if the same case happened in case of general borrowing, any income earned on the temporary investment out of the general borrowing is not reduced from the borrowing cost, that is transferred to P&L. That is transferred to P&L. Okay. And amount of borrowing, this is important. Amount of borrowing cost capitalized cannot be more than actual borrowing cost incurred. Cannot be more than actual borrowing cost incurred. Okay. We'll do some problem. I will explain here. And seventh problem. Excel Limited began the construction of the new building on 1st January 2000. It obtained 1 lakh special loan to finance the construction of building on 1st January. And interest rate is 10%. This is what specific borrowing. Other outstanding, these are the general borrowings we have. In case of general borrowings, we have to calculate weighted average rate. How to calculate? So 5 lakh and 9 lakh is the borrowing amount. And interest rate is 11% and 13% is there. And amount of interest is how much? Amount of interest 5 into 11%, 55,000, and 9 into 13%, 1 point, so 1 lakh 70,000. So 1 lakh 72,000. What is the total borrowing? 14 lakh. And the rate is 1 lakh 72,000 by 14 lakhs into 100. How much? 12.285 or 29%. 12.285 or 29%. This is the weighted average rate, and this is the capitalization rate. This rate is used only for the purpose of calculating a borrowing cost in relation to the amount utilized out of the general borrow. And here expenditure incurred on the respected project was given. And remember, in the respected expenses, out of the total, first we used out of the specific borrowing, and the remaining we used out of the general borrowing. Okay. So here specific borrowing rate of interest was given 10%. So 2 lakhs out, sorry, out of the 2 lakhs, what is the specific borrowing is 1 lakh. The remaining amount is stated as general borrowing. So 1 lakh into 10%. 1 lakh into 10% into 12 by 12. First January. Okay. And out of the remaining 1 lakh into 10%. That, sorry, the remaining part is what? General borrowing, right? Into 1 lakh into what is the general borrowing rate? 12.29% into 12 by 12. And the remaining three amounts are covered under general borrowing. So 2,50,000 into 12.29% April. So Jan, Feb, March is over. From the April onwards up to the 31st December, we have to consider. And it means 9 months are there. 9 by 12 and 4,50,000 into 12.29% into how many months? From the 1st to July onwards, we have to consider 6 by 12. And another one is 1,20,000 into 12.29% into from the 1st December means 4 months, 4 by 12. And this is the amount to be capitalized. Amount to be capitalized. And the first part is how much amount? 10,000. And second part. So 12,290. And third part, 2,50,000 into, so 12.29% into 9 by 12. So 23,044 and 4,50,000 into 12.29% into 6 by 12, 27,653 and 1,20,000 into 12.29% into 4 by 12, 4,916. This is the amount total 10,000 plus 12,290 plus 23,044 plus 27,653 plus 4,960. 77,903. This is the amount of borrowing cost to be capitalized. 77,903. That is the amount of borrowing cost to be capitalized. And the remaining amount. And the remaining amount. So and also we required to write the journal entry. So for the purpose of the borrowing cost, so what is the amount required to be capitalized here? Expenses incurred on the respected construction of the respected asset plus so borrowing cost to be capitalized and total amount we have to consider. What is here? 2 lakh plus 2 lakh 50 plus 4 lakh 50 plus 1 lakh 20. So 10,20,000 plus borrowing cost 77,903. So total amount is required to be capitalized and we write the entry asset account debited to bank. Asset account debited to bank. And here they consider 12.285% as a weighted average rate of interest. And out of the total borrowing, remember the first amount we have to consider it as specific borrowing and the remaining portion we consider it as a general borrowing. Okay, general borrowing. And this is the one. Entries bank building account debited to bank. Okay, and next. And here, Excel Limited began construction of a new plant on 1st April, obtained a special loan of 8 lakhs. So to finance the construction of the plant, rate is 10%. Rate is 10%. And here, and the expenditure was made. And non-specific loans are 46 lakh, rate is 12. One loan is there. So then we consider 12% directly as a weighted average rate. So then what happened? So no need to calculate weighted average rate. Out of the 10 lakh, first 8 lakh we consider it as a part of specific borrowing. Remaining is treated as a part of general borrowing. So 8 lakh into 10% into 12 by 12 and the remaining 2 lakhs into 12% into 12 by 12 nothing but 24,000 and remaining 24 lakhs into 12% into 1st August. 1st August to 31st March. Okay. So August, 1st August, August, September, October, November, December, Jan, Feb, March. 8 months are there. So 8 by 12 and 4 lakhs into 12% into 1st January means 3 by 12. This we have to consider. So 24 lakhs into 12% into 8 by 12, 1 lakh 92,000, and here 4 lakhs into 12% into 3 by 12, 12,000. 12,000. And this is the amount of borrowing cost we have to consider. Okay. So how much? So 80,000 plus 24,000 plus 1 lakh 92,000 plus 12,000. 3 lakh 8,000. This is the amount of borrowing cost to be capitalized. What is the cost of asset? Total amount 10 lakh plus 24 plus 4. 38 lakh plus 3 lakh 8,000. So plus 38 lakh. Nothing but 41 lakh 8,000 is the cost of asset. We write the entry asset account debited to bank. Okay, asset account debited to bank. That is the one. And coming to the 11th problem. Glen Limited began the construction of a new building on 1st January, and on 1st April the following two loans were taken. On 1st April following two loans were taken. Loan 60 lakh from Data Bank Limited was taken at the interest rate 8% per annum. This loan was fully utilized for construction of the new building only. And this is a specific loan. Loan of 20 lakh from Satya Bank Limited. Out of this loan amount of 6 lakh was utilized for working capital purpose. And it means out of the 20 lakh, 6 lakh is a non-qualifying asset. And the remaining 6 lakh is meant for non-qualifying asset. And the 40 lakh related interest only we have to consider. Okay, total interest 1 lakh 9. This has to be divided in between 14 lakh and 6 lakh. 6 lakh related only expense, and relating to the 14 lakh, depending upon the period, we have to capitalize it or expense it. Construction of the new building completed on 31st January, because the building construction was started from the 1st April 2022 onwards. And it means January, February, March. These 3 months, January, February, March. So these 3 months we cannot be capitalized. And sorry, we started with 1st April. 1st April 20 for the year 22-23, 1st April to 31st March. And even construction was completed over on what 31st January 2023 and was ready for intended use on the same date. And none of the loan was repaid during the year. The building is a qualifying asset for the purpose of AS-16. Right? And this is important. Out of the loan from Data Bank Limited, surplus funds temporarily invested for this short period. Data Bank Limited is a specific loan, and any income received will be reduced from borrowing costs. 30,000 reduced from borrowing costs, and then nothing but 60 lakh into 8% minus 60 lakh into 8% into. So what is the period we have? Period by 12 minus 30,000 we have to consider. So what is the amount here? So in case of Data Bank Limited, 60 lakh into 8% into 10 by 12. What is the 10 by 12? So we have to consider 1st April 22 to 31st January 23 only. The construction is over by 31st January. Even it is a shorter period. In the problem says clearly, it is covered under qualifying asset definition as per AS-16. Even the shorter period we consider as per AS-16. So into 10 by 12 minus temporary investment income. Okay, total is 3,70,000, and this is specifically used for construction of the building only. Okay, completely we cover. And so remaining 1,92,000. Out of the 1,92,000, so 1,92,000, so working capital purpose is there, and construction of asset is there. For working capital purpose, 1,92,000 out of how much amount? 6 lakh. 6 by 20. And in case of construction is completed by 31st January, and February, March related interest expense is expensed and transferred to P&L. So out of these two parts are there, 1,92,000 into 14 lakh by 20 lakh into 10 by 12, and 1,92,000 into 14 lakh by 20 lakh into 2 by 12. And this is an expense, and this is an expense. This is only required to be what? Capitalized. So only required to be what? Capitalized. So here is the one construction of the factory building. So this is out of the completely data bank limited. So completely capitalized. So totally, so how much amount is there we have? So interest to be capitalized here. So 3,70,000. 3,70,000. But out of that, actually total interest incurred 60 lakh into 8%. 4,80,000 we have. 4,80,000, and the remaining amount we have to transfer to what? Profit and loss account. P&L account transfer just. And coming to the Satya Bank, construction of the factory building. Construction of the factory building. So how it is treated as a qualifying, but working capital is not a qualifying asset. Out of the working capital, 1,92 into 6 by 20. But coming to the construction of the factory building, so 10 months part is only covered here, and the remaining 2 months part is expense. So 10 months part is 1,12,000, and remaining 2 months part is so 22,400 capitalized. So sorry, transfer to P&L. And here, how the 4 lakh is arrived. Okay, and the total, okay, total 60 lakhs into what is the rate? 8% into 10 by 12. How much amount of 4 lakh? Out of the 4,80,000, 4 lakh is covered under capitalization as per AS-16. Remaining 80,000 is only expense. But out of the 4 lakh, 30,000 temporary income is there. So that's why interest to be capitalized is 3,70,000. Okay. And this is the one. And this is one of the important problem. So we have specific borrowing and general only general borrowing. One thing is there, and temporary investment income is there. But out of the current year, total 12 months, we didn't consider. Only up to the date when the asset have been completed, till the date only we have to consider. That's what 10 months is. And this is also one of the important problem. On 1st April 2022, Workhouse so limited take a loan from financial institution 25 lakh for construction of building. Rate was 12%. In addition to the loan, company has taken multiple loans. So these are the general borrowings. We have to calculate what is the capitalization rate. And here that amount is used for construction. So building is a qualifying asset. Building is a qualifying asset. And plant and machinery is a qualifying asset. See, a construction of building, plant and machinery, factory shed was completed on 31st March. So this is also a qualifying asset. But furniture is not a qualifying asset. So because ready-made furniture was purchased directly from the market. And then out of the total borrowing cost you calculated, you need to apportion it again. You need to apportion it again. And the factory shed was ready for production of 1st April. And first we compute what is the borrowing cost we have. But these are the total amount we spent. So borrowing cost. First, coming to the specific loan, what is the rate of interest? 12%. Coming to the general loans, we have to calculate what is the weighted average rate of interest. Here, weighted average rate of interest is computed as. So here, weighted average rate of interest. So debentures. So amount of interest. So total interest by total amount of borrowing. 7,50,000 by 63 lakh. How much? 11.9048%. Okay. And coming to here, the total borrow. So first on building, because the specific loan was taken, loan was taken. So for the construction of the building only, for the construction of the building means this 25 lakh will be used for building purpose. And out of the 75 lakh, 70 lakhs, 25 lakh is the specific loan, and the remaining 45 lakh is the general loan. So out of this 25 lakhs into 12% is completely to be capitalized, and the remaining 40 lakh 45 lakhs into, now what is the general rate we have? 11.9048%. 11.9048% we have to consider, and we need to apportion it. We have to apportion it. And how to calculate? So 45 lakhs into 11.908% into 12 by 12, and 22 lakhs, so 12 by 12, and this is not capitalized because it is not a qualifying asset. And the remaining 90 lakhs into 11.908% into 12 by 12, and factory shed 43 lakh into 11.908% into 12 by 12, and this part is expense 22 lakhs into 11.908% into 12 by 12 in that way. So how much amount is that? 82,500 is expense and the remaining amount is capitalized. But this is amount relating to the general borrowing, and we also have the specific borrowing. What is the specific borrowing amount? 3 lakhs. 25 lakh into 12%. Total 3 lakh plus here 6 lakh 67,500. 9 lakh 67,500 is there. Okay. And on the general borrowing, we have to. In this way, we need to provide. Okay. So this is the one. And one more part we have relating to the AS-16. So three parts are there relating to capitalization of the borrowing cost. One is the commencement date and cessation date, suspension date. Commencement date. From what date borrowing cost is required to be capitalized? So 3 points are stated. If these all 3 points are satisfied, then we can start the capitalization of the borrowing cost. What is that? Expenditure on the construction of qualifying asset is being incurred. And second one, borrowing cost is being spent. And third one, all activities that are necessary to prepare the corresponding asset must be in process. So for bringing the asset into available for usage, whatever the process are required, whatever the activities are required, those all activities must be in progress, must be in process. So if these 3 points are satisfied, then we can start the capitalization of the borrowing cost. If any one of the point is not satisfied, don't consider. But and one more important point here is, so all activities means physical activities and technical and administration activities both are covered. Even technical or administration activities are in progress. That is also considered. That is also considered. Okay. And another one, sorry, another one is cessation of the borrowing cost. Cessation means when we stop the capitalization of the borrowing cost. When we stop the capitalization of the borrowing cost. The capitalization of the borrowing cost will be stopped only when all activities necessary to prepare that asset have been completed. And if that asset came to available for utilization, or all activities relating to the preparation of that qualifying asset have been over. In that case only, so we have to stop the capitalization of the borrowing cost. Sometimes here substantially all activities means for what? For example, we constructed the completion of we constructed the total building, and the decoration or only some part of the painting work is only pending, and we can use it. The major part is over, and the irrespective of the few part, if the major work is has been completed, except the minor modifications or minor works, they is it that is also treated as what? Substantially all activities are completed, and we can stop the capitalization of the borrowing cost. Okay. And another one is suspension. Capitalization of the borrowing cost should be suspended during the extended period in which active development is interrupted. Active development is interrupted. And it means what? For example, so during the construction of the building or construction of any asset, and some strike is happened for 3 months or 4 months. Then during the strike period also you need to pay the interest. But during the strike period, whatever the interest you paid is cannot be capitalized because our work has been interrupted. But and during the strike period, if any technical or some administrative work is in progress, then that in the technical period also, whatever the interest paid, you may capitalize. You have to capitalize it as per AS-16. You have to capitalize it. For example, here, so H Limited incur borrowing costs for the purpose of construction of qualifying asset for its own use. The construction was completed by May. However, decoration work is under progress, which is expected to be completed by November. After which H Limited will able to start using the said asset for its own use. So here the major works are all substantially all activities relating to the asset for bringing the asset into available for use are completed. Then we will stop the capitalization of the borrowing cost. That was over on 31st May. Even though some minor modifications are pending, we can't consider. So 31st May, we have to stop the capitalization of the borrowing cost. Okay. 1 minute. So here, coming to the 16th problem. A company is in the process of construction of large manufacturing plant in a backward area, and as a part of this project, it was also purchased a residential building which is to be used for housing of the workers engaged in construction of the plant. The purchase cost of the building is met by raising the long-term loan. Company intends to dispose of the building once construction of manufacturing plant is completed. If the manufacturing meet, so this is about what qualifying assets. Sorry. Push. And I have one question. Means during some temporary delay due to the strikes we have some temporary delay is there. But during that period, they are doing some administrative work, some administration work. So we can't stop the capitalization of the borrowing cost. We can use it. Okay. So here two exceptions we have. And one is the temporary delay in necessary part of process getting ready for usage. If it is delay is also forming part of the getting ready for usage of the asset, and during the delay if any substantial technical or administration work is done, no need to suspend the capitalization of the borrowing cost. In that period also you can capitalize it. Okay. Then coming to the another problem. The Harish Construction Company is constructing a huge building project consisting of 4 phases. Expected that full building will completed over several years, but phase one, phase two of the building will be started as soon as they are completed. And following is the details of the work here. We have phase one, phase two, and coming to the phase one, total amount spent 34, 64, 55, 68. Total 221. But the loan taken at the beginning of the year 200. 200 into 15% and 30 lakh, and this is the borrowing cost. This is the amount of interest we spent, and during the middle of the current year phase 1 phase 2 over, and out of the 30 lakh 30 lakh phase 1 phase 2 part is how much amount? 98, and the remaining, so how much amount? 123 lakh is the, so 30 lakh into 98 by 221. This is relating to what? Phase 1 and phase 2. But out of that, 6 months only capitalized, and the remaining 6 months is expensed. Why? Because that phase one, phase two became operational at the middle of the year, and the rest of the 6 months we have to expense. And coming to the phase three and phase four, those are operational throughout the year. Those are operational throughout the year. But coming to the first 2 months, the phase three, phase four, first 6 months, phase three, phase four related interest, we treated as a part of capital work in progress. We treated as a part of what? Capital work in progress. Here, interest, total amount of interest relating to phase three, phase four. So here we computed. So how much amount? 16 lakh, 16 lakh. 30 lakh into 123 by 221. And held in what? Capital work in progress till the assets construction work is complete, and thereafter capitalized in the ratio of cost of the asset. Nothing but phase 3 and for phase 4. And no part of the interest amount should be expensed during the year when the work is in progress, because the construction is not yet completed. Okay. And in this case, on 1st April, construction was started for 32 crore is being utilized. Construction of ceiling and work was held up totally for a month during the year due to high water level. and due to the high water level is very common in the process of construction of the ceiling. So even in while constructing the road in the forest area, animal attacks are also very common. So in that period, some delay is there. The construction has been stopped. Even during the period, any interest paid is required to be capitalized. So this is a qualifying asset. Purchase of equipment machinery is not a qualifying asset because no data is provided relating to substantial period. I assume that that asset ready for usage immediately on the date of purchase. Working capital is never be a qualifying asset. Purchase of vehicle is also not a qualifying asset. Technical know-how. If you purchase it directly, you can use it immediately. So it is not a qualifying asset. Out of this, this part is not a qualifying asset. And total interest flow 25 crore, to the extent of 25 crore is only capitalized and the remaining is expensed. Okay, and here ABC Limited is in the process of getting an entertainment park constructed. For this purpose, it has taken a loan. The said park consisting of several rides and facility, each of which can be used individual. Those are independent. So three-fourth part of the park was constructed and can be opened up for public, while construction of the remaining part is in continue. In that case, those the rights, the construction of those facilities are separated and those are not depending upon one another. So to the extent of completed, but capitalization of a kind of borrowing cost should be ceased and should be stopped. And the for the remaining part and the remaining one-fourth part related interest only required to be capitalized till the completion of the respected construction of the asset. Okay, we have to capitalize only one-fourth part, and the remaining three-fourth part related we have to stop the capitalization of the borrowing cost. Okay, so this is about what borrowing cost related topic. Only three. And first we discussed about the what is meant by borrowing. And so one more point relating to the amortization of discount. I have one problem. Here is sorry. And how will the interest to be capitalized when qualifying assets funded by borrowing in the nature of bonds that are issued at discount? Here is the example. And Excel Limited issued in year one a 3 years 10% per annum bond with face value of 1 lakh at a price of 90,000. And what is the interest here? 1 lakh into 10%, nothing but 30,000. Sorry, 10,000. Nothing but what? 10,000 per annum. 10,000 per annum. At the first year 10,000, second year 10,000, third year 10,000. But here 1 lakh bonds are issued at 90,000. At a 10,000 discount we have. 10,000 discount we have. And this 10,000 is apportioned over 3 years. That means 3 years. So 10,000 by 3. 3,333. And the last year we consider 3,334. So this interest generally a borrowing cost, and the discount amortized part of the discount is also treated as a borrowing cost. That means first year interest 10,000 plus amortized part 3,333. 13,333 is the borrowing cost. Second year interest 10,000 and amortized part 3,333. That is the borrowing cost to be capitalized. Third year this one. Okay, and this is the one amortized part and total borrowing interest part, total borrowing cost to be capitalized and is accounted as per AS-16. Okay, I hope you understood entire topic relating to the borrowing cost, and I will upload this material in my Telegram channel, and the link will be provided in bio in my description box. And if you like the video, so please make a comment in the comment box and follow the Telegram channel. And if you are new to my channel, please subscribe it and also share it to your friends and also press the like button. Okay, thank you, take care, bye bye.